and we had plenty of dramas because we built it up to kind of hundreds of people and tens of millions in revenue, and then did an IPO on London Stock Exchange and then NASDAQ, and then the vice chairman came in and sort of did a coup and kind of pushed out my brother and I basically, and then we had to come back and do an anti-coup because he was doing bad things, and then we ended up merging the company with another NASDAQ listed company and then selling it to Oracle via kind of long path.
We're really kind of like started. So just wanted to welcome everyone to Supermoon House. We are having a conversation with Richard from Fabric from East Denver, one of my favorite conferences. And Richard, I want to start with your background. So you're talking a lot, of course, about Fabric, about your current investment focus, about the current company, but I also want to learn a little bit more. How did you start? How did you start building Fabric, and how did you start professionally way before Fabric was even existing?
What a chance to indulge, but hopefully not too much. Thank you for having me here to the Hacker House. And it's a wonderful day, but actually kind of nice to be in the shade for a little bit. So essentially, I think, so I have two full brothers, and I think it's fair to say that most people, when they're kind of becoming teenagers, around about that time, sort of fantasize a little bit at least about what it would be like to be in a band and to be, to be able to sing or play an instrument and be a rock and roll star of some description. Is that fair? Yeah, I think so.
Even I wanted to do it.
I think everybody goes through that phase, and so I guess we sort of definitely sort of went through that phase, and maybe slightly influenced by the fact that our father was in the music business, and so we had hung out in studios and with artists and recording engineers and so forth, and so had a kind of flavor for what that kind of path might look like, but I guess the punchline on that is that it became pretty clear pretty quickly that none of us had the talent necessarily. Actually, my brother Charlie plays the guitar pretty well, but we weren't about to become rock stars. And at that, but it was kind of like, it was great to be in a band. It's great to kind of have that notion of being, my sport at university actually, and before that was rowing. You're in a crew, you're in a band, you're going out there and you work together to go and make something happen, and preferably something spectacular. And so when it was clear that we weren't going to be the next whatever, or Robbie Williams or whatever, of course probably wasn't even around at that point in time.
You never know.
You never know. It could still happen. But we that the internet, like in the early 90s, was starting to take off. And if you think, actually, I mentioned this to someone the other day, and they were like, "Wow, it's interesting. You forget how time passes." But at that point, the crazy cool guy or crazy cool nerd who was making real waves was Bill Gates. And Bill Gates, he had this dream of a kind of a personal computer on every desktop. And we all remember that there was a point in time when Tom Watson Jr., what it was, from IBM, said in the 50s or 60s that we have like 5 computers and that should be enough for the world. But everybody thought that Bill was pretty crazy with the idea of a computer on every desk for personal and for kind of work use. And he was also, it was just astonishing, obviously, the rate at which he had come in and kind of been clever, smart with the way he built the business, cunning even, some people might say, and had built so much value so quickly, and then built this platform where applications and developers would build on top of Microsoft, and you create that dominance within a given market. And that sort of coupled with having sort of tinkered with the with computing over the kind of the years since we were kind of whatever 9, 10 or whatever, by the time we were sort of coming out of university, the kind of folklore of Silicon Valley and the opportunity to kind of create your own band and build something amazing, something impactful, from something as intangible as software, was commonly understood. And so that felt like the great opportunity. And then that coincided with the web starting to take off. I was using kind of Mosaic browser prior to Netscape at the end of university, and you were just starting to hear the rumors of the fact that Netscape was going to do an IPO, and so we started kind of moonlighting to come up with something that the band could build. I remember we had actually a whiteboard that was like this size, so it was transportable. So in case, if you could just, wherever you were doing your working, you could just like draw on the whiteboard. Right? It's quite cool, kind of whiteboard. But it was those sessions, like jamming around the whiteboard, coming up with what it could be, and we were all over the map, from kind of restaurants to recording studios to or recording label actually, through to then what we conceived of as the potential for the internet, for the web, and the use case that we were a little bit close to, and I have to credit my brother most directly with Charlie, that is, for thinking about this, was so London was very big in the advertising and media industry, and people would create sort of video content somewhere in London and have to get it to the client somewhere else in London, and the way in which that was done was basically on a bicycle, and so you'd have rushes of this production that's done for the client, and you'd get it across and then watch it, and then get back with the comments, and go back and forth and so forth. And so and there was some high speed stuff like cable and ISDN that was sort of starting to come out. The idea is, could you create a network, let's call it MediaNet, across London with the new internet protocol based network that would be much, much cheaper and more available to many people, and all of these people could communicate across it. Maybe that was the idea. But then when we looked at the state of the art in terms of routers and switches and all of the stuff that you built the internet from at that point in time, we're talking like 94, 5, 6, that kind of thing. If you were going to make money from that, if you were going to deliver a service that worked for delivering the video, and you were going to bill a certain subscriber for it, or for the YouTube, whatever, none of that infrastructure to do that, from the kind of prioritization of packets at the routing level, through the kind of middleware to configure everything, through to the good billing system, none of that existed. And so, long story short, was quite a long story, we ended up saying, let's build one bit of that stack, and experimented with all the bits I had described, and ended up kind of building a bit in the center of that sandwich that turned out to be, and this was true of my first company and second company, possibly the least entertaining cocktail party conversation that you could have, because you talk to someone about, oh yeah, we build a kind of like headless, UI-less middleware based on Corba, and actually an open source implementation of Corba called OmniOrb, and we ship it to telecoms providers who are wanting to adopt IP networks and make sure that their operations can scale as they build out their OSS. Kind of, it wasn't very, it didn't really grab people's attention. But that's what we ended up building in a company called Orchestream. And so I guess by the time I was 28, 29, I'd got a taste of building a band, getting a track or two or albums out, and having people actually adopt it. And there are many stories, like our first hit, probably we really had to hustle. We were we were building it for enterprises, and then we decided actually we needed to build it for service providers, and there was a particular technology that we needed to kind of leverage that was just coming out. It was Cisco's tag switching technology that became MPLS, but the only people who were actually using this in anger properly was Hong Kong Telecom. So our first client, we were in London, the first client was Hong Kong. So it's
which makes sense. There was a lot of tight connections between Hong Kong and London back then.
Well, that's true, but I think the God knows why they were the ones who were the early adopters, but they were. And anyway, they were kind of the first client. But I'd had we got a taste of I guess you say the startup drug, and we had plenty of dramas because we built it up to kind of hundreds of people and tens of millions in revenue, and then did an IPO on London Stock Exchange and then NASDAQ, and then the vice chairman came in and sort of did a coup and kind of pushed out my brother and I, basically, and then we had to come back and do an anti-coup because he was doing bad things, and then we ended up merging the company with another NASDAQ listed company and then selling it to Oracle via kind of long path. But the software is still being developed and sold by Oracle today to manage networks. So as a kind of engineer, having done engineering at university and I'm being product focused, I'm certainly proud of that, but plenty of lessons of what not to do along the way.
Which is like absolutely impressive, because so there's a lot of like consumer facing apps that is, I sometimes like feeling like it's easier to come up with idea, it's easier to pitch it, easier to explain to market. But when it comes to infrastructure products and adoption there, I think that's always like raises so much I don't know, like interest and respect from just my side, because it's like it's crazy, like you have to understand that market, you also have to go to like sometimes like big corporations, enterprises, and it's completely different pitch, like it's way harder to sell.
It's interesting, but both have their alluring aspects and definitely their challenges, and like obviously at the moment, one of the accusations that would be leveled at Web3 is that it's lacking in the consumer apps. It's got a lot of infrastructure. I've seen some of the memes flying around Twitter that at some point the VCs will get tired of backing the infrastructure and in the hope of yet another token being kind of launched. I think it's a complex stack that's being built, so it's not surprising there are waves of that. But it's definitely turbocharged by the token element this time around. But and I didn't stick to that space, so I did then help Axel Partners actually set up in Europe. That gave me a kind of direct experience of Silicon Valley style investing, of how some notion of what you're looking for and what the proposition is from the teams, some idea of kind of portfolio construction, some of the craft of kind of venture. Although when I was doing that, which was like 2001, 2002, 2003, that was like an eon ago in terms of the nature of venture. There was essentially no venture in the UK or even Europe at that point in time, just a handful of firms. You would even point to someone like 3i as being one, and
then what I heard, like also venture was completely different. It was like more about the founder, and like venture would be an actual partner, like co-founder in a startup, like helping, assisting them along the way, like less about like.
I'm not sure. Well, I'm not sure that was true. At least
That's
here's
what I heard from Silicon Valley.
Well, I mean, definitely the folks had to understand it was kind of like lower scale because you bigger tickets and probably wasn't investing at the seed stage, more at the kind of Series A stage. I guess that's probably fair. But it might have been a good partnership, but the nature was a little bit more kind of rarefied and ivory tower. Like VC, it was very black box. Nobody sort of really said what happened within a venture capital firm. It was a little bit mysterious and enigmatic, and you somehow had to get an introduction and get in, and you'd pitch and then walk away and wonder how the decision was going to be made. And that obviously through the noughties that started changing because we got into the read-write phase of the web, and the ability to blog and tweet and so forth popped up. And whenever there's a new channel like that pops up, then people innovate with it, and so that meant that I guess founders could reach VCs and general partners and VCs more directly, and they vice versa could push their kind of thoughts out there. And obviously Fred Wilson at Unisquare Ventures was very early in doing that, and you built a more authentic and personal brand with a broader set of people that way. And again, I always find it interesting to think back. I can remember when I was building my second company, I had someone actually who'd come out of Cisco who was helping with PR and marketing. He was working, delivering that. And I was like, at that point, it would have been like 2005, I guess, 6. I was like, this blogging thing, let's go hard on blogging. Let's let's really push that and get our message out. But especially in that enterprise sales or service provider sales space, that was the antithesis of the received wisdom of how to do things at that point in time. At that point in time, what you'd do is you'd have a Word document, obviously not even a Google Doc, You know, and you'd have approvals on the Word document around a press release, and that would get painstakingly approved by multiple partners. And you'd put out that press release and do press briefings in a very, very controlled kind of manner. It was very different, rather than just like boom, you know, like let me just say something and see what people comment back at you. So, so I think that changed a lot of the nature of what it meant to be a venture firm. And actually during that period, maybe coming back to your point about the difference between infrastructure and consumer, there was this big shift called the consumerization of the enterprise that was partly open source inspired. For me, it's also connected to this whole notion of like the developer as kingmaker as well. I did a couple of blogs on that actually back in the day. But the idea being, rather than having to go through lots of gatekeepers to sell a piece of technology to a company, you could get the message and indeed the product, like once it was deliverable, either quick download or SaaS or whatever, into the hands of the practitioners within the enterprise. And they would say, you know, I really like this, you know, let me give it a go. And then that wasn't just about, you know, reaching them with a marketing brochure in some way. It meant you could also engage with them and they could try it and get some value out of it. And so all of and then indeed they would then benchmark, like, I've got this tool that I use at home, or, you know, personally, I've got to use this tool that I use to kind of on a hobbyist basis. I've got this tool that I'm now being sold as part of an enterprise solution. You know, you have to survive in comparison to those other consumer products. And then once you got yourself in there and had a kind of grassroots support for your product, and good examples of this were like Splunk, which ended up being like tens of billions in value, but also open source software where people would try the software, use it. And you created that kind of almost guerrilla marketing technique to get the support from the grassroots. And then you'd go in later and say, look, if you want the enterprise features and support and single sign-on and all of this stuff, then you can pay for the enterprise license. And so in my second company, I ended up sort of morphing what we did in that direction. And so you had to think much more about the individual you were marketing to and how they could, and coined a phrase at that time, it wasn't about, you know, speed to download or speed to kind of install or speed to even get it up and running. It was all about, you know, speed or time to love, basically. You have to, you know, and it was a shift towards kind of product first ways of building companies, where you couldn't hide behind all of the marketing and sales cycle and the decision makers and your product had to be great. And so you had to really focus on how quickly you could get to a single user use case and that moment of joy and love for the product, a product that was really delicious in its experience. And you focus on that, and everything good would kind of flow from that. And so we did that with our product as best we could in the second company, Tideway, which was kind of an early component of the cloud, basically, and infrastructure as code kind of push and so forth. And then for a couple of years after that, I then went to see how bad I could be at proper consumer products, and worked with my other brother William in building a few different things, but a sort of secondary marketplace for tickets for sports and music. And then he basically had the idea of sort of turning this into something that was a bit like a combination of Facebook and Vine, with these short clips of sport content that could be sourced from under fair use licensing from various the property IP owners from cricket and football and whatever. But also the idea was to kind of ultimately end up with this user-generated content. So you can imagine everybody sitting around the sports stadium and filming a little bit of what was going on, and then you aggregate that, and you could go into that network and see the game from different angles, like professional, but also consumer-oriented. And again, so quite a different thing. I also worked with another good friend of mine on a kind of farm-to-fork kind of food and wine proposition. So those were the majority of my kind of the consumer ones I tried.
Did you enjoy consumer? It's a really different.
I mean, look, I think I think at the time people said don't do that because you learn so much in one particular area and you shift to a new area, and there are some transferable skills and experiences, but some things that are entirely fresh. And so that's a bit of a way you should compound what you're doing. It happened that way. I then fundamentally sort of shifted to focusing on backing up, other founders and working with them from the earlier stages, to build, help them build their projects, which is what we did at Farstarter, which became Fabric, as our kind of Web2 and our Web3 brands. And maybe having done both consumer and enterprise or whatever, that's useful now in what I'm currently doing, because I've got experience of both, and there are some transferable lessons. But I think if you're going to be really good as an entrepreneur, focus is probably on one particular domain is the way to go. Although, of course, as in many things in life, there are the exceptions that prove the rule. The folks that kind of do something in sort of sustainable environmental technology and then build a kind of humanoid robot company or whatever, who just clearly have that ability to get shit done and inspire other people to get shit done. And obviously that core skill goes an awful long way, no matter what you're doing.
Do you think it's different for like our VCs and startups? So you're saying like for startups, it's for founders, for entrepreneurs, it's important to be focused on a specific like area where they can advance and obviously get like more expertise. Do you think it might be like different for VCs? Because as you said, like you got like experience in different areas, and that probably enormously help you whenever you work with founders, because you can also relate it to other industries and help to navigate them. What do you think about like that from a perspective of VC?
Look, I think to do anything well, it's a specialism, and it's I think there's this whole kind of narrative about how, or one of the narratives that founder operators make great VCs because they've got that experience, they've walked a mile in the shoes, and they can empathize and they can problem solve in a kind of that sympathetic way. So that's I would say that was true, because of course I'm cut from that cloth, so I'm kind of inclined to agree. But it's definitely not the only way to be a great investor.
What do you think like makes a great investor? What is like maybe like three like main skills that would make a great investor, like from your perspective?
Someone once said to me really that frankly being likable was one of the most important things. Because and I guess maybe that's table stakes, but it's not necessarily true of everybody. I think at the end of the day, so there's no direct route to this, but at the end of the day, the personal brand and the company brand you have for your firm is the thing that is immensely important. And there's there's a bit of a weird sort of irony to this, which is your battle is to earn the opportunity to work with some of the most incredibly talented entrepreneurs or the most you can possibly find. And then when you get to do that, kind of in principle, or by definition, they're the ones who need you the least. And so you're doing a lot of things to get to a position where you don't have to do those things anymore. Because they know what they're doing. But I think that what you are doing is that, and at least this is how I felt about when I was building companies, directly myself and not, building a firm, was that the entrepreneurial struggle is real. Yeah, you never know what's around the corner exactly. It's super tough, and you've got to be full tilt. And if you feel you can add to your mix, the backing of an individual partner and a firm with a brand, that means that your next sale, your next hire, your next contract negotiation, whatever, is a bit easier because you've got that adding to the substance of the endeavor you're building. Then you'll do that because it's just a kind of this. It's very. This is your baby. This is your life's work. And now you're propelling it forward faster on multiple dimensions, because you can say you're backed by Sequoia, you're backed by Accel, and so I think you can't, because it's not authentic, go out and say I want to build a venture firm or a personal brand which people just want to work with because I told you should work with us because we're really good. That's just generally not a great kind of pitch. Yeah. I mean, if we were touching earlier upon the topic of dating, but we'll come back to it. It's like, normally that direct approach, is going to select for the wrong type of people. There's normally a kind of artistry. There's a courtship involved in this thing, and there's normally a value in don't tell me, show me that you're good. And so you have to do the same in venture. You have to go out there and show that you will work through the tough times with entrepreneurs, even if it's about landing the plane and not necessarily kind of getting escape velocity and getting to the moon, and that builds your reputation. You need to show that you can tackle tough problems in tough moments in ways that don't make the problem worse. You have to show that you know how to get out of the way when there's the machine is motoring, priorities being set. You know how you can contribute by just facilitating that from the board. And so I think if you show those things, then you can build a reputation for it, and then that builds the brand, and then people will come seek you. And I guess that relates to one of the critical things in venture, is that there are way too many topics to understand, way too many projects to meet, way too much sort of signal. There's too little signal amongst the noise to extract. And so, and we see this in the returns amongst venture. You have to get to the point where the high quality teams are seeking you out. That's the way to sort let's not call it wheat from chaff, it's not like that, but be fortunate enough to find those handful of companies that are really going to deliver monumental returns in any given year. You can't go through the haystack looking for the needles. But again, you can't just set up shop and say, hey, I want the best founders to come to me. It doesn't. You have to go off and do the work to build that reputation, and certainly it feels like that works that's never done. So I think a great investor genuinely has built a reputation to be able to deal with those subtle issues and intricate and complex issues of company building, and is likable and humble enough to be able to meet and knowledgeable enough to meet an entrepreneur halfway with a kind of a prepared mind in a topic, but also realizing that you shouldn't overstep. And at the end of the day, you're hitching your trailer to their wagon or their horse cart, and it's their show, and they're the ones that if they are committing to it for many years in every single way, opportunity cost and capital and reputation and the rest of it, that's the strong signal you're looking for. And rather than second guessing whether or not they're solving the right problem or solving the right problem in the right way, you just got to have take that risk and have faith in the people that you're backing.
It's very I really like how you're describing investor from a perspective that they cannot just say come here, if you're a talented founder, right, come look for us. And I remember actually either it's Sequoia or one of the big funds. I remember seeing on their website they were saying, if you're a talented team, we'll know you.
Yeah.
So they don't have any application process. There is no way to contact them. There is no email. They're just saying if you're building something great, we'll find you.
Yeah.
And how many projects like Fabric, for example, looking for in a post to founders looking for you, applying to get funding from Fabric, compared to how many projects you are actually going and looking?
Proactively find. I think it's the kind of the middle ground. And what I mean by that is that at least my particular favorite type of activity to accelerate the chances of running into a great opportunity, great talent. Serendipity is a way that we put it sometimes for that, and also what we try and achieve for our founders is that you've got to be prepared, and you've got to go off and engage genuinely in conversations with people who are at the coalface of whatever frontier you're looking to, whatever new market you're looking to invest in, and that if you have conversations with practitioners who are and try products at that frontier, and you have conversations with them, and they will have a list of problems they're trying to solve, and they'll go, yeah, and I've just started working with this product to solve that problem, and that will, and you just have to be the way I phrase it, kind of be a bloodhound about it. Then it's go, oh, interesting. Let me unpick that product and associated products, and what is the status of that little category. And then you have a kind of an opportunity to ping, reach out to that the companies in that space and say, hey, I heard about this problem from this person, and you seem to be solving it in an elegant way. I'd love to talk about that. Or indeed, and you're just there at the cusp, or the other direction, like the person you're talking to who might be trying to build something will say, actually, I know they're looking for funding. Shall I introduce you? And so I think that's the sweet spot there. So Trent over at Ocean is a great person, practitioner I've spoken to. I kind of, for me it's similar to, there's no shortcut when you're building a product to having very granular, specific, and ongoing, continuous feedback from sophisticated customers who are trying to solve problems. And I guess it's kind of similar, and that's at least how I think about how you want to kind of hone and train your firm to operate. And at the end of the day, sort of time is your scarcest resource, so you need to try and just like constantly focus on that. It's a little bit like Amazon's customer obsession or whatever. But I mean, what company isn't customer obsessed? It's like, except that's the case. But make sure you set yourself up so you're not distracted from that obsession, and you're set up so that you can learn as rapidly as possible from that obsession. So anyway, that's the way I'd look at it.
I think from what you said, also you're receiving a lot of applications from different projects. So it must also give you enormous information about the market conditions, like what kind of projects are appearing, what are the new problems, or is it being solved? Is it something helpful for your existing ecosystem? Like, do you share information on how market is evolving, sharing additional, I don't know, like tips and perks, or is it your existing portfolio ecosystem can also utilize?
Well, we definitely try and let the portfolio kind of cross-fertilize a bit, and sort of maybe one part of the portfolio can use and work with the other for sure. I think, we try and be kind of research-oriented and go out there and have the conversation I was describing to you to understand, what are the problems that are being solved at any point in time, and talk to the people trying to solve them as well as the ones encountering those problems. And we publish sort of some of that, but I'm not sure that the founders in any given space will necessarily, they will find comfort in the fact that we have done that work and have a perspective, and then I think hopefully that makes us eligible for entering into a partnership, possibly, but they won't necessarily learn that much because they're so deeply focused on their given area, I would say. And also, at the stage we invest, when it's so much to do with people, even if they learn about some particular subset of the market from what we've researched, they may be doing something slightly different down the road anyway, because they'll evolve, what they're doing in there, and so it may become sort of less relevant, and they're the only ones who are going to be able to go on that journey. But yeah, no, it's I wouldn't deign to say that kind of venture firms can teach anything to founders. As I said, I think it can just know enough to kind of earn the right to kind of try and be in the same meetings with them when they're trying to work out a path forward. And look, that's putting aside, there are aspects of company building, the kind of the blocking and tackling of how to run a good board, how to run a good hiring process, how to think about structuring and rounds and fundraising, structuring of the entities and structuring of rounds. Those things where you clearly, as a venture, either a serial founder which I had the pleasure of being, or as a venture investor, you've seen a lot of data points, and so you can be helpful in that department. But other than that, it's kind of more about kind of meeting halfway. And look, and we've seen the pace at which sort of Web3, moves, and the complexity of something like, I've seen a lot of some of the kind of eigenlayer is definitely, with its sort of restaking capability, put simply, is sort of kind of a bit of a darling of ETH Denver, and long may that last. It's fantastic, and I think there's going to be a big ecosystem building around it. But I also see on Twitter, people saying, "Hey, here's a hot take. Here's the best take I've seen yet of just actually describing how it works and what it does." And I just mean that as an example of there's a lot of complexity inherently in this space, moving very fast, incredibly capable and experienced people focusing on a very specific area. So you're never going to be able to keep up with that.
Complexity reached completely different levels. It's even hard to understand, navigate, and if you're not technical, and you're listening to a pitch or startup pitching sessions. Some founders don't really realize who is their target audience and who is their just primary audience listening to them in the moment. So they get really, really technical and not really describing the value. And I'm sure you're also receiving a lot of cold, cold emails or cold pitch, when startups are looking for you at events. What do you think is the most important thing for founder to mention to grab your attention?
So I think you've hit on an important one, and I think Web3 has been more guilty than other kind of waves of talking too much about the technology and not about the problem being solved. And we kind of understand why that is. There's a long journey to building the stack, and so there's a belief fueled by the potential of issuing tokens that you can incentivize the community to come, and therefore don't need to pay so much attention to the capabilities of the product. I think, of course, that's dangerous traps to kind of to fall into, and so. But I think we're kind of coming out of that phase somewhat now that the kind of full open web stack is becoming scalable, enough. The DX, if you want to call it that, is good enough for to attract larger numbers of developers. And I think we're definitely entering a phase where it's going to be about the developer community. More than it ever was before, and those developers then better pay attention to building applications, consumer applications that really truly leverage some of the advantages of Web3. And obviously the other area that's been talked about a lot here in ETH Denver has been the proverbial AIX crypto. And look, for us, it's one of those things. It's it was never. So we would characterize the Web3 layer. When we call it the layer of cryptography or cryptographically, clad or instantiated data, or decentralized data networks, or we always saw that as just a middle layer of a stack that kind of has this shift to the edge in terms of distributed computing at the bottom end, and armies of AI algorithms at the top. It was never about it's the money side of things, transactions and credit and so forth, was always actually about data. That's where that needs to go, and we have a kind of a notion of moving from TradFi to DeFi to NoFi, as you truly have finance, sort of serving our real world activities. But to do that effectively, you need data to be shared the whole time, and you need that to be privacy protected to make that work. And you need to kind of these sort of evolving sort of stablecoin and blockchain-based rails for kind of payments and for credit. And so that, in a sense, it's not just about payments, it's about data. But in terms of the whole stack, it's not about data. It's about the algorithms. It's about the power of, no longer just recommending a product on Amazon, no longer targeting you with a product in terms of an advertisement, but creating something many somethings that can represent your needs from, the entire web, from the online world, agents that can represent your needs, and represent your needs in terms of negotiating for the data you want to share, representing your needs in terms of participating in the governance of different networks that you're involved in, finance, health, deep in networks, whatever it might be, but also, so what are your needs? How are you going to negotiate your deal? And how are you going to contribute to the governance? All of those different things. And so you end up, hopefully, in this world where you're more comfortable sharing more of your data because you understand what's in it for you, and you understand that your privacy is going to be protected and so forth, and that you're capable of, being intermeshed with a whole myriad of different sort of application experiences. It's such that we, in the way we describe it, you shift to this more kind of human-centric computing paradigm, and that's used human-centered, human-centric, user-owned kind of related concept to describe what's kind of coming down the road. And I think everybody accepts that you need every bit of the stack for that to work. You got your watch, you got your pin, you got your glasses, you got your phone, you got your, all of these different aspects. Then you've got the data, your identity and your value and your data that you're sharing, and then these algorithms. They all come together such that if I come here to talk to you, it should work out what it is that I need to know in advance of talking to you, and whisper in my ear exactly that information. For example, but I probably don't download an app to do that. It just knows, because of your context and all of the data you've shared with it, what is needed right there and then. It's it's more of a co-pilot, an assistant, an agent sort of operating on your behalf.
And how do you think it will affect our human interactions?
Hopefully we won't have any of those anymore. It's like, it makes life.
It's just going to be silent.
Yeah. I think humans will always want to, meet new people and have coffee and break bread and break dance and all of those things. So I don't think that that's a real problem. Although I have two daughters, 8 and 11, and making sure that they have healthy boundaries with themselves about how much time you spend on any device is important. Having said that, I'm dying to try the new Vision Pro and see where that's going to go.
So I have a very young sister, and at some moment I remember she's just always on her phone, and she wouldn't even meet with her friends because they're there on her device.
Yeah.
And I'm starting wondering how our interaction is going to be, because now we're talking about blockchain, we're talking about AI, we're talking about agents, or they can represent you. So maybe for us, the human interaction, a physical interaction, is important.
Well, I was going to say that Darwinistically, those people who spend too much time on their devices won't end up breeding, and therefore, therefore that we can't go too far in that direction. But having said that, of course, a large proportion of people these days meet each other online now. And you don't need to meet for that long in order to have children. So that maybe doesn't work. But look, I didn't want to be too sort of dystopian about it, I do think it's about making sure that we raise our children to be aware of this balance, because you're never going to be able to enforce it top down. It's about individuals realizing healthy patterns, or practicing healthy patterns of kind of living. But who knows? Maybe it isn't dystopian. It depends how you define what it is that we want to do. If we can have much more high-scaled, very high-fidelity interactions with all sorts of humans, and characters that we live in our own realities anyway, actually.
Maybe it's not even a reality.
Well, we can get to all that thing, but possibly. But even, clearly, factually, you just, your reality is just your perception of reality of who you are and so forth. who's to say there's a problem with us all being kind of wired up to our Vision Pros and not going anywhere, connecting to one of those machines that just kind of oscillates your muscles from time to time. You know, that's a judgment. It's going to come with some advantages.
Yeah, now we see like
I can see how that could be a controversial endpoint to recommend for humanity, but you may end up with, you know, specializations of humanity. Those who want to do that and spend their time doing that, and those who don't. You know,
it may be stepping to completely different innovations. You know, I feel like for like previous generations are imagining crazy like about like us using PC and like working just like mostly on our computers, right? So it might be the same. Maybe like Where's-It is dystopian, but it's just like a next step like towards.
Well, exactly, and I think we all enjoy the benefits of you know, whatever our phones and our PCs today, and we don't rebel against it too much. But
and you were also touching on meeting people online, so I want to move to that topic about Web3 dating. And you also mentioned before about Raya. So I wanted to ask you,
you want to hear the Raya
what
anecdotes?
happened with Raya, and then
Well,
let's go to Web3 dating.
See if I can sort of weave those together and get back to what I think is actually an interesting frontier of innovation that founders are kind of playing out, which is basically the intersection of, you know, Web3 social with Web3 finance, and with, you know, people becoming the platform and people becoming the marketplace and so forth. So and the network. So we'll come back to that, but.
Yeah, because we definitely need to elaborate on people becoming a marketplace.
Yeah, exactly. So to talk to the different kind of people being the marketplace, people in the marketplace, or a marketplace of people. So I had recently separated on the route to kind of divorce, and I happened to be in LA, which I'm not very frequently, and got invited to a house party. The CEO and founder of Raya, and so this is my defense for having been on the app at all. He heard the news and he grabbed my phone and said, "Dude, we need to sort you out. Let's get you on the app."
Did you pay for subscription, or they gave you a free one?
I actually can't remember how it went down, but he got me on anyway. I think there are grades of it anyway. So I don't. Can you be totally free? I don't know.
I don't think so.
So, but maybe there's a secret back door.
Yeah.
But so look, I mean, I guess the point there is that it's a pretty good illustration of the fact that there is a misalignment of incentives. I mean, it got very popular in particular. I mean, it was a deal we didn't do, actually. The idea was that we might invest in it at the seed stage, and we didn't do that. It got very popular. I'm sure that would have been a very healthy, if not fund investment, very healthy kind of personal investment. But there's a misalignment of incentives because, of course, you want to attract people onto that marketplace, which is what it is, and you want to keep them on there for as long as possible. And there may be a sort of segment of people who are happy to do that because they're looking for, should we call it serial monogamy, but that's not really aligned with ultimately finding kind of long-term relationship, which I think is arguably more fruitful. And I guess, you know, the link between that and, you know, social on the Web3, finance on Web3, the people becoming the platform and people creating marketplaces, is that if you can have aligned incentives between the, if you as the sovereign individual own, you know, obviously your identity, what you do, your value, the data that comes from that, and you can create at very low cost marketplaces, networks in the dating world, but also in other worlds, where you have the opportunity to plug in a business model which is not just ad revenue driven, that is, or even if it has got some notion of advertising, but where it's a decentralized model and you can share the returns between everybody, you have an opportunity to align the incentive with the outcome of finding true love, should we put it that way, and doing that in a number of different ways. And there's a lot. Each of those platforms that can arise from the needs of a certain group of people can take the open source capabilities, can sort of rage quit, if you will, and fork, some of the other networks that exist, take those capabilities and build something that's custom to their given needs. And we were in a conversation actually with Sam from Arweave about how, in some senses, DAOs are just a reinvention of public companies where you have voting rights and you have some ownership of this stock. And so, what's the difference? For me, I think it's one of those examples where you could say it's just a cheaper version of that. It's just a more digitally instantiated and cheaper and democratized version of a public company. But the just belies the fundamental innovation that actually going back to what we discussed earlier, these are just more powerful, cheaper computers than the one you had on our desktop, and that was just, but actually the effect of that is enormous. It creates this, when done in the right way, we have the choice about how those different networks and platforms are governed, and there's experimentation, because this is all kind of these open interoperable systems. The experimentation can happen at an incredibly fast pace, because you can plug in these live running services to do with identity or credit score or anything together. That even faster pace, you could argue, innovation than using the kind of open source source code. That's a fundamental shift, and that being 100 times cheaper can produce 1,000 or 10,000 times the pace of innovation, and part of that is the ability to experiment with the business models, and hopefully end up with, because people will choose to stick to the ones that are more aligned with their ultimate needs. So that's, I guess, the hope for some of the Web3 consumer apps we're hopefully going to see.
It's really interesting, because it's it becomes more I would say customizable for individuals.
Yeah.
And also touching on the dating, I feel like we can also create agents that will look for a perfect match for you with all the data.
The swipe.
Yeah, you don't need to
left or
swipe
right
anymore.
agent.
Yeah,
Yeah,
just go ahead and look.
Well, exactly. Well, I think you can connect, if you will, you can connect that to the notion of there being no app and there being just an experience, as in you arrive at a location. If the agents know what you're looking for, they can immediately it's just a notification immediately that pops up that we've matched on your behalf already, but I mean,
which is crazy.
But the same apply. Let's get away from dating in a sense. Obviously, it can be an amusing and a useful kind of thing to discuss. But it's that could be the same for books, and it could be the same for fashion items. It could be the same for working out what is the best set of itinerary for going to see volcanoes in Central America. Given your preferences and budget and timing.
Groceries, you don't even need to worry about ordering groceries anymore. It can just be all automated, which is really crazy. And I know that we're short on time, so I just wanted also to ask on the Fabric side. I know that you are looking a lot more into blockchain and AI right now. Is there any specific areas you're looking for right now? What type of projects you guys are trying to find, maybe at this Denver in a short period of time?
Yeah, I mean, I've mentioned already that intersection of how you can summon new social networks in Web3, and they can be intersecting with financial networks, use of finance, but they can also be intersecting with my core area of interest is still not hit prime time yet, is definitely the intersection of the incentivization of data sharing in the health domain, with through the use of kind of Web3, and then obviously the intersection of that data set with AI. I think hopefully that should be literally something that can give life-enhancing outcomes to us all. So that's one area. It's a very great interest, but I mean we're still very interested in fundamental components of the stack. We think that ZK has found its use case on scaling, but we think there's going to be much more of that. It's going to be highly zero knowledge is going to be very ubiquitous, and so we're looking at outfits in that space as well. So, and then beyond that, I think we're definitely. I read a blog post kind of. I want my NFT kind of sort of at the time of that whole shift towards the 1,000 true fans thesis and how we can recreate the around these social networks, these tribes that aggregate around a particular interest, birds of a feather that flock together around a particular interest, that we can have long tail, small amounts of value extracted, but you can also have people who will pay a lot of money to be very close to a particular, an athlete or a pop star or an author or a painter or what have you, and I think the exploration of the potential there has just begun, and particularly on the sporting side, but also the music, like the intellectual property and the franchises built around the stars there is enormous, and is people find very compelling. And I think when married to the kind of Web3 suite of technologies, there's still a lot of untapped potential there. So excited by what might happen when you can own every emoji that you utter, and maybe you become the star, and that's the part of the fluidity of it. But no, I think that intersection area is pretty exciting too.
Yeah, I'm also personally really excited about Web3 applications in the entertainment space, because I don't think we did really much changes before, with the previous hype. There was a lot of buzz around NFTs, Web3, disrupting entertainment, but nothing really changed. It added some revenue streams, but the process, this whole archaic system haven't yet changed.
Well, look, it's complex, and if you get into kind of music publishing rights or something like that, it's very hard to forklift change that. It's all sort of buried in contracts.
Spotify tried, and they didn't succeed.
At some point, someone will crack the code and hive off a small part of it, and then everything will start coming on chain, and there'll be a big reimagination of the whole thing, as Mary Meeky used to say. So no, it'll happen, but I think that is definitely an interesting area, and for me that connects back to my dad's world, and I can remember in the mid-90s pitching how we were going to have streaming digital music and everything was going to change, and we're kind of there, but if that was a big disruption to digitalization, obviously I think tokenization and having kind of being able to have dynamic aggregation of sort of or grouping of tribes around different interests, that's going to be a different level. So I'm very excited about that.
Yeah, I'm personally really excited about next couple of years. I think we're stepping into very, very, very interesting times. And thank you, Richard, so much. Definitely continue this conversation. There's so many questions I want to ask.
Look forward to it. Let's do a walking one next time.
Yeah.
A walking podcast, that's a good idea.
Or in the hot tub. We actually have a hot tub. Do you want to do that one?
Thanks, Elena.